Hello, students. Welcome to our lesson for today. Today, we are going to discuss about tourism development. Are you ready? Let's start. In this lesson, we will be able to determine the relation between tourism planning and tourism development, explain the roles of the public and private sector in tourism development, describe the characteristics of individual tourism development projects, discuss the steps in the tourism project evaluation and analysis system, clarify the role of the government financing incentives in tourism development, and analyze the private sector financing for tourism development. Just recently, we have just finished discussing the tourism planning as a process, and at the end of its process is the plan development stage. So now let's discuss the relation between tourism planning and tourism development. Tourism planning process is designed to produce goals, strategies, and objectives for the destination area, while the tourism development plan provides the overall guidelines for development, outlines broad development concepts, and identifies individual development opportunities worthy of in-depth analysis. Now, as to the roles of the government and the private sector in tourism development, the government and the private sectors have important roles in tourism development. The role of the private sector is more limited and more clear. Its principal role is to provide tourism facilities and services to the traveling public while maximizing financial returns. The center of the private sector's involvement in tourism development is the entrepreneurial role, and it involves idea generation, development of project implementation, financial risk-taking and investment, and the management of operations. The private sectors provide specified technical skills required in the development process through tourism consultations, market research findings, architects, engineers, designers, economists, and project managers and builders. They also provide a large proportion of the capital funds for investment in tourism projects through its financial institutions, corporate leaders, and individual citizens. We have also the non-profit private organizations, which also play an important role in tourism development in many destinations. These organizations include the Chamber of Commerce, travel associations, foundations, historical and cultural societies, recreation and sports associations, religious groups, and the like. The role played by these groups vary, but typically they operate attractions such as historical or cultural centers, museums, art galleries, recreation, and community halls. The most important and widely accepted function of the government in tourism development is to act as catalyst and to complement the effects of the private sectors, including non-profit organizations. The World Tourism Organization points out that as a general principle, the government should not do what the private sector is able and willing to do to complement with the tourism development. Thus, we must always remember that the government sector should not compete with the private sector. Although this is generally an accepted principle, instances of overlapping and conflict between the public and private sectors arise due to the following reasons. The private sector is not willing to finance the development of the project because of its limited profit potential. The government, however, has given the project high priority due to its regional economic contributions or its pivotal role in encouraging tourism activity. Another reason is an existing tourism facility that is bankrupt cannot be sold on the market. Thus, the government feels obliged to buy the facility. Also, the government stands to provide low-cost vacation opportunities for disadvantaged groups such as the poor, the sick, and the aged. And this is often called social tourism. And lastly, the government wants to encourage private sector development by initiating new types of development through demonstration or pilot projects. Now let's discuss the characteristics of individual tourism development project. Individual tourism development projects are generated either through the tourism planning process or by the private sector in destinations without tourism plans. The public sector may identify development opportunities for private sector investment. All individual tourism development opportunities must be carefully researched and analyzed before their construction. Potential tourism development projects have some basic differences. The first is their capability to generate financial profits, and some projects such as hotels and commercial attractions are profit generators, while others such as travel information centers and infrastructure facilities are usually not. Although the latter facilities do not generate direct revenues, they are essential components of the tourism products of the destination area. Profit-generating projects are the subjects of cost-benefit analysis. Tourism development includes many elements. Some include projects that involve building construction, such as superstructures, and others require only human resources and equipment, such as guided canoe trips, which are under the category of programming and events. So here are the 9 criteria identifying desirable projects. So first is the economic contribution. So in here, the government agency will check if the project creates a significant level of income and employment benefits. Another criteria is the environmental impact. So the government should check if the project is developed in compliance with existing legislation and regulations governing the conservation and protection of the environment. The third one is the social or cultural impact. So the project does not jeopardize the social well-being of the citizens. Another one is the competitive impact. So the government agency should check if the project complements rather than competes with the existing tourism business without seriously jeopardizing the financial viability of any individual enterprise. Next is the tourism impact. So we need to check if the project adds destinations by creating an attraction and by being beneficial to the tourism industry. So here we need to assess both the positive and negative impacts of the project. For the positive impacts, it might have jobs or it might provide jobs for local people, as well as income for the local economy. It helps preserve rural services, increase demand for local food and crafts, and tourists mainly come to see the scenery and wildlife, so there is pressure to conserve habitats and wildlife. While the negative impacts might be the damage to the landscape, like litter, erosion, fires, disturbance to livestock, and vandalism. It might also lead to traffic congestion and pollution. Local goods can become expensive because tourists will pay more. It might also result to shop stock products for tourists and not everyday goods needed by locals. Demand for holiday makes housing too expensive for local people, and demand for development of more shops and hotels. Next is the developer and operator capabilities. So in here, we need to check if they are capable of developing and operating the business successfully. Another one is compliance with the policies, plans, and programs. So we need to check if the project is in compliance with the national tourism policy, or is it according to the national tourism development plans and programs of the country. As to the case of the Philippines, we have the Tourism Act of 2009 that declares a national policy for tourism as an engine of investment, employment, growth, and national development, and strengthening the Department of Tourism and its attached agencies to effectively and efficiently implement that policy and appropriating fund. Another one is the equity contribution. So in here, we need to check if it's profit generating. So the investors have enough equity to include the venture. And lastly is the feasibility. So in here, we need to check if the project is profit generating and it is economically beneficial. So next is the steps in tourism development project evaluation and analysis system. So as we can see in here, we have 7 steps. The first one is the pre-feasibility study, followed by site analysis, then market analysis, economic feasibility analysis, cost-benefit analysis, government financial incentives in tourism development, and private sector financing for tourism development. So first is the pre-feasibility study. A pre-feasibility study determines the justification of a more detailed economic feasibility study of a project and the subjects which the detailed study should tackle. So the 4 principal objectives of a pre-feasibility study are to determine whether the available information is adequately detailed to show that the project will not be viable or will not be attractive to investors or lenders. And then the available information indicates that the project is so promising that an investment decision can be made on the basis of the pre-feasibility study alone, and that detailed study is no longer needed. And certain aspects of the project are so critical to its viability that they must be analyzed as part of the detailed economic feasibility study. So a pre-feasibility study can be completed by private developers, by a government, or by private consulting organizations on behalf of the developers and or a government agency. Next one is site analysis. So a large proportion of tourism-related projects require physical site location, and economic feasibility study can either specify a site or determine if any appropriate site exists within a geographic area. The criteria for site selection and evaluation vary according to the type of the development or tourism project under consideration. For example, an urban hotel requires proximity and concentration of industry and commerce. Likewise, a motor hotel requires proximity to highways, while the placement of tennis courts is dictated by the wind and the conditions of the site. Tourism project site criteria are divided into 3 categories, and these are market-related site criteria, criteria related to the physical characteristics of the site, and other criteria. The market-related site criteria normally include the site's proximity to potential markets, transportation facilities, accommodation, restaurants, and shopping centers. And the selection requires a knowledge of the particular business type, experience, and a broad knowledge of construction site engineering. Ideally, a multidisciplinary team consisting of a specialized tourism consultant, landscape architect, and architect should be used for this purpose. So next is the market analysis. So as to the market analysis, it is often the most expensive and time-consuming element of the whole study process. The cost and time required either are directly dependent on the combination of original and secondary research used. The market analysis usually begins with a collection and review of secondary sources of information, since it gives a clear picture of the type and scope of a market research needed. An analysis of secondary sources in tourists can be used and time-consuming and exhausting unless the researcher is familiar with the tourism-related bibliographies and institutions where major tourism libraries are located. As soon as the review of secondary sources of information is completed, a plan of original research is drawn up and implemented. So this involves carrying out a variety of surveys and requires the researchers to have a thorough understanding of marketing research techniques. So the most common methods are, we have the questionnaire method. So you might have the personal interview or call via telephone or mobile phone, and then mail. But in our generation nowadays, we usually use email. So we can just send email to our potential market. And then we might also use the focus group or a Delphic method. So the questionnaire method is the most frequent project feasibility study. Questions are directed to potential users of the project or to the owners or management of competitive or similar enterprises. So we have advantages, major advantages of the questionnaire method, like versatility, speed, and cost. Questionnaires are versatile because they can be used in almost every research problem. This method is usually faster and cheaper than the observational method because the latter involves observing and studying the behavior of people, objects, and occurrences rather than questioning for the same information. While the questionnaire method has some disadvantages, like the respondents may either refuse to be interviewed or may refuse to answer specific questions. Mail questionnaire surveys, or like through email, usually have low response rates, with as much as about 90% of the questionnaires not being returned, while personal and telephone questionnaire surveys usually have higher response rates. Another disadvantage of this method is that a respondent may be willing to answer the question. So next is, we might also use the focus group discussion. So in here, you need to gather all your participants and then you discuss each of the questions that they need to answer. So in here, there is a high probability of getting enough data or information, but sometimes the participants invited do not attend to this kind of data gathering. Then in here, we have also different forecasting techniques like the extrapolation or linear, exponential, or cyclical. We also have the covariation, correlation, summation, tests, and we also have here the calculating methods like calculating by inches, by sales potential, by unit sales, elasticity coefficient, or by models. And then we also have the guesstimates. So it might be via individual or by group. So for group, we have the committee or Delphi process. So forecasts are generally divided into 4 time spans. These are short term, like 1 day or 2 years. Also medium term, like 2 to 5 years, and long term 5 to 15 years, and futurism over 15 years. With regard to the individual tourism project and the evaluation of its economic feasibility, the forecasting of the potential market demand usually covers the medium term to long term forecasts, which is the first 15 years of operation. This is appropriate because most commercial tourism projects operate to reach their full financial and operating potential within the first 5 years of operation and pay back their investors' equity within 10 years. So next is the economic feasibility analysis. So the economic feasibility analysis determines the capability of a project in producing satisfactory financial return for its investors. This step consists of 7 distinct steps. So here are the steps. The first one is the description of components, scale and sizes, and quality levels required to capture the potential market demand, followed by specification of unit prices and rates, then estimation of revenues, market and demand levels, and unit prices and rates, estimation of operating unit and profits, preparation of capital budget, estimation of capital expenses, net income and cash flow, and calculation of rate of return on investment. The forecast of potential market demand and expressed desires and expectations of persons interviewed provide the key inputs in describing a detailed project concept. So the project concept describes the components, scales, sizes, and quality levels of facilities and services needed to satisfy the potential demand discovered. Then, the unit prices and rates are prepared. So the next 2 steps are usually referred to as the production of forecast income statements that indicate the estimated revenues, operating expenses, and operating profits for the project. When estimating revenues, the total potential demand must be broken down into segments, and the applicable unit prices and rates and units must be multiplied against the resulting volumes in each segment. The operating expenses include costs incurred directly in operating the project, such as the cost of food and merchandise for resale, the cost of labor, the cost of marketing, the cost of energy, and the cost of repairs and maintenance. Publications which contain industry average performance statistics can help in estimating these operating costs. And there is a greater individual accuracy when the forecaster is familiar with the type of business under consideration and when detailed staffing schedules and other operating standards are developed for the project. There are actually other expenses that the project will encounter, and these are all related to the capital investment in the development. So to estimate the expenses, a capital budget should be prepared first. So a capital budget is a detailed itemized budget of the capital investment required by the project. In the case of tourism project, this item will normally include building construction costs, professional fees, infrastructure costs, recreational facility costs, furniture, fixture, equipment costs, contingencies, and the like. So the most realistic capital budgets are usually produced by a multidisciplined team consisting of tourism consultants, civil engineers, architects, and landscape architects. The capital budget is first prepared by identifying all the capital costs to be encountered, then pricing out each item. So a contingency factor normally between 10 to 20% is added to some items to cover unforeseen cost overruns or items overlooked. After the capital budget has been completed, the capital-related expenses for the project can be calculated. These include financing charges on long-term debt, depreciation, municipal taxes, and insurance premiums on fixed assets. When these expenses have net income figures and cash flow forecasts, the net income and cash flow projections generally cover the useful life of the project, which for most tourism enterprise does not usually exceed 15 to 20 years of operation. Then the final step in the process uses one or more financial techniques to measure the rate of return produced by the forecast net income and cash flow levels. Majority of experts favor the time value yardsticks, especially the net present value and internal rate of return techniques. These two methods are based on the present value concept, which implies that money has a time value. Thus, a dollar received today is worth more than a dollar received a year from today, since the dollar received in profits in earlier years are more valuable than those earned in late years. Both the net present value and internal rate of return techniques use cash flow figures as basis for their projection and discount the value of future cash flows at certain assumed rates of returns. So based on the rates of the return predicted through the use of one or more of these financial analysis techniques, a decision is reached whether the project under consideration is economically feasible. So if the rate is less than the requirement of investors, the project is considered not feasible and vice versa. So now let's proceed with the cost-benefit analysis. Commercial projects found to be economically feasible may or may not have to be further analyzed using the cost-benefit analysis techniques. Cost-benefit analysis are usually carried out by or on behalf of government agencies. They help these agencies measure and weigh all the costs and benefits of alternative projects. In this way, the agencies will be able to determine which project will produce the largest net benefit for their economies and for their society as a whole. However, the size of the return of the capital of private investors cannot be the only basis for the government support, because the government agency has no economic, environmental, and social or cultural responsibilities that have to be considered before giving financial incentives or other support or approval to a project. So for example, a proposed casino may generate high profits for the investors, but the government agency refuses to support the project because it feels that such project will determine the social well-being of its destination area. So the agency has developed some criteria to rank projects against each other and support those with the highest rankings. As discussed earlier in this topic, these are the criteria. Let's have a review. Economic contributions, environmental impact, sociocultural impact, competitive impact, tourism impact, developer and operator capabilities, compliance with the policies, plans, and programs, the equity contributions, and the feasibility. So some of the factors related to the criteria that have been mentioned can be measured quantitatively, others cannot. So for example, the economic contributions of a project cannot be forecasted numerically, but the social or cultural impacts cannot. Thus, a cost-benefit analysis should weigh the quantifiable and unquantifiable costs and benefits of a tourism project against each other. So if the result of the cost-benefit analysis are positive, some project developers may apply for government financial incentives, others may go ahead without government assistance. Okay, so now let's talk about the role of government financial incentives in tourism development. One of the major problems of tourism projects is getting financing needed for their development. Many tourism projects have been proven to be economically feasible but have not been developed because of the lack of the right amount of type of financing. The number of government agencies which provide specific financial incentives for tourism projects have increased rapidly in recent years, and these agencies play their dual roles as stimulators and entrepreneurs. So government financial incentives for tourism projects are classified into two categories, namely fiscal incentives and direct and indirect incentives. As to fiscal incentives, these are special allowances for income tax and other tax purposes, while the direct and indirect incentives includes several programs aimed at easing the financial requirements of tourism projects. The main objective of most of these incentive programs is to help businesses carry out tourism development projects that may have been abandoned or delayed because of lack of assistance. So here are the list of the fiscal incentives. So first, we have here the tax holidays. So the government agency defers the payment of income taxes or other taxes for a predetermined time period. Another one is remission of tariffs. So the government agency relaxes or removes import duties on goods and services required by the project. And the government may also give tax reductions wherein the government agency lowers the normal tax rates that would have been paid by the project. And here are the direct and indirect incentives. First, we have the non-refundable grants. So this in this kind of incentive, this is reducing the capital budget of a project. We also have the low interest loans, like reducing the amount of interest that the project must pay during its operating life. For interest rebates, the government agency rebates a portion of the project's interest cost during its operating life. As to forgivable loans, the government agency loans funds to the project, then forgives all or part of these over an agreed time period. The next is loan guarantees. The government agency guarantees a loan or loans given to a project by a private financial institution. Another one is working capital loan. So the government agency loans funds to meet the working capital needs of a project. For equity participation, the government agency buys some of the available shares in the project and therefore becomes an equity investor. Another one is training grants. The government agency provides a non-refundable grant to the project for staff training purposes. Then for infrastructure assistance, the government agency assumes the cost of some or all of the infrastructure required for the project. Then we also have the leasebacks. The government agency purchases lands, buildings, or equipment and then leases them to the project. And lastly, the land donations, wherein the government agency donates land free of charge to the project. So not all projects requesting financial help receive it because most of the government agencies that provide financial incentives usually receive more application for assistance than their budgets can handle. So next is the private sector financing for tourism development. Although governments continue to play a greater role in providing financing to tourism projects, it is the private sector that generally supplies majority of the financing. The private sector ranges from individual citizens to major institutional lenders such as banks, trust companies, credit unions, insurance companies, and other commercial finance companies. And before lending money to a tourism project, a private financing agency usually requires that the following points be accomplished by the lenders. So first is previous management experience in tourism and an established credit record within the management development team. Another one is proof of economic feasibility via an independent economic feasibility study. Another one is adequate collateral or security for the fund to be borrowed, and adequate equity capital to be invested by the owners of the projects, and proof of stability in the tourism industry in which the project will function. Tourism projects require equity as well as borrowed capital from owners and investors, and these individuals are the risk takers in the development, and they are rewarded with profits from their investment. All right, so this will be our last topic, which is about the detailed design and construction. In the last stages of the tourism development project, several levels of architectural designs and drawings are prepared. So here are the procedures. First, preparation of preliminary architectural concepts, followed by the preparation of preliminary architectural design, then preparation of final architectural design and construction of the project. So in each of the stages, the drawings become more detailed and exact. So when the final drawings have been approved, the construction of the project may then start. So that's the end of our discussion for this topic. I hope you understand everything that we have discussed in this lesson. If you have any questions, clarifications, or concerns, you may just comment your queries on this video. So see you again on our next lesson. Goodbye, everyone.